Hi guys, Daniel here, and welcome to My Data Driven Life. I am pleased to announce a new series, a tutorial series, and I wanted to introduce that series to you today. So this is the first video in the series, and let's just get started and show you the slide deck. So this tutorial series is Investing 101, and you can see the link to the slide deck there. You just type that in and you can see the slide deck. Here you see the series overview. This video is the introduction, number one, and there are going to be approximately 10 other videos after this one in this series. After I finish this series, I might have an additional video where I do some sort of Q&A. I'm not sure about that yet, but this is basically the plan that I've laid out for the series. And I'll come back to this page later and go over some specifics for each of the chapters, but let's move on before we do that. Okay, so introduction. Before we get started, I need to give a disclaimer. I'm not a financial advisor. I'm not certified in any way. I did not major in economics. I'm just a random guy on the internet, and you should probably take everything that I say with a grain of salt. But anyway, my intended audience is complete beginners interested in investing but aren't quite sure how to get started. So in addition to complete beginners, this is also for people that have already been investing and they may want to refine their strategy or see how someone else does it. And this might be a unique perspective for them to kind of rethink some of their strategies. Why should you invest? Well, there's a lot of reasons you should invest. I think the two most important reasons are first, you'll get a much higher annual return on the money that you have. If you put your money in a savings account, nowadays savings accounts have a horrendously low interest rate. I actually have one that I use called Varo Bank that has a 2.8% APY, but that's actually fairly rare. I've seen a few interest rates that are a little bit higher for FDIC insured savings accounts, but it's very rare and it's very niche. Like there's one for T-Mobile that's at 4%, but you have to be a T-Mobile customer, and there are also other limitations. So generally, the recommendation to save all your money that may have been true decades ago doesn't hold up today because there are much better ways to get safe returns on your money. Additionally, you're going to be saving for retirement anyway and building some sort of retirement portfolio. So retirement portfolio. And there are obviously better ways to do this, like a 401k or a Roth IRA. I'm going to talk about these strategies as well. Now, there are a lot of risks associated with investing, and I'm going to introduce a strategy that tries to mitigate a lot of risk, but some of those risks are high market volatility. As you probably already know, in March, the stock market took a really big dip. It did actually recover fairly fast, and overall for the stock market, it's a pretty good year. But there have been some longer recessions and depressions, obviously. It's still something that I think is worthwhile investing some of your money into. There are some other risks, and one of the primary risks is yourself, because whenever stocks go down, you might get emotional and decide to sell and bail out before things get any worse. On the other hand, if a stock is doing incredibly well, you might buy in just because of the hype, and then you end up buying in at the peak and then it starts falling again. And so FOMO, fear of missing out, is a huge part of the psychology of investing. And I have a whole chapter dedicated to the psychology of investing. So we're going to address those concerns as well. And then I think the final major risk is that there's a lot of bad information out there. A lot of YouTubers will make sensationalist claims in order to make their videos more clickable. I don't entirely blame those YouTubers because that is how you drive clicks. You make some big sensationalist claim like Tesla stock will 5x in the next 5 years or something, or you know, Bitcoin will be worth 500,000. I think you should be very skeptical if someone makes really big claims like that. I'm hoping to keep things a little bit more realistic with the advice that I give you. So why should you listen to me? So overall, I would consider myself a jack of all trades, master of none. And while you should take everything that I say with a grain of salt, I tend to start learning about a topic and then I obsess about that topic. And then I spend the next 6 to 12 months learning everything I can about that topic. And that is something that I've definitely done with investing. I started investing in June 2020, and I've watched hundreds of hours of videos. I've read all kinds of blog posts and articles and papers about the topic, and I think I have a fairly good understanding of the basics of investing, and I want to take all that knowledge and transfer it to you. So as I said, I have about 6 months of investing experience. Those 6 months have been a very intensive learning process for me. So my goal is to provide insights from my own beginner perspective. I've only spent 6 months in this. This is my perspective from starting out with a market. In the next video, Prerequisites, I'm going to go over some of the things that you should do before you ever start investing. Like, let's say you're living paycheck to paycheck, that might be an opportunity for you to do some budgeting and figure out if there are some things that you can cut out of your life, like a streaming subscription that you no longer use, or some random subscription to some web account. Maybe you can get a better rate on your car insurance, you know, stuff like that. So I think there's benefit in setting a budget and at least looking at your monthly income and monthly expenses for a few months to get a good idea of what your cash flow is. It's also important to have an emergency fund, so I'm going to talk about that and offer some strategies there. And if you have high interest debt, specifically stuff like credit card debt, then it's best to take care of that first and pay that down and then start investing. I'll offer a few tips on that as well. In the video after that, I will go over some basic terminology. So this will be kind of like a glossary video. I'll be going over terms like bear market and bull market, market cap valuation. Maybe I'll get into stuff like PE ratio, a lot of terms that you should be familiar with as you're deciding what stocks to buy and what strategies you're going to employ. And after that, I want to do a video on the psychology of investing because I think that's a very important topic. You need to make sure that you're not an emotional investor. You need to make sure that you're not giving into FOMO. You just have to be smart about this stuff and make smart decisions when it comes to buying stocks and especially not selling stocks. My advice is for you to be a long-term investor, not a short-term investor or a day trader. I think those two strategies are very ineffective, and I will explain why I think that's the case. After that, I'm going to do a video on some of the fundamentals. And by fundamentals, I mean some metrics that you can use to evaluate whether a stock is a good buy or not. Most commonly, you look at stuff like the PE ratio, you look at the quarterly earnings reports. There are certain things that you can pull out of there to see if it's a good company and if they're doing business in a good way. This is actually a skill that I need to work on myself. So I'm going to do a lot of research for that video and share all the things that I learned with you. And then I'm going to go over a beginner strategy. And basically, I'm going to start you out by buying some index funds in the form of what's called ETFs. I'll explain those terms later. And you can do a little bit of stock picking, but I'm going to go over kind of how to build a portfolio and how to make smart decisions that are as risk averse as you need them to be. And then I'm going to do some app reviews. The first app that I'm going to review is called Acorns. It's a passive investing app where you can deposit a certain amount each week. You can also deposit roundups. So basically, every time you spend something with your debit card or your credit card, you can actually round up to the nearest dollar, and the difference is deposited into this investing account. And then after that, I'm going to review Robinhood, which is the app that I use the most. I honestly think that it's a really solid app. It definitely has its issues, but I think it's great even for beginners. There are just a few things that you have to make sure that you don't do. And I'm going to talk about why I don't recommend doing any margin trading and I don't recommend doing any options trading. If you want to learn about that kind of stuff, this is the wrong tutorial series. I think that stuff is really reckless and basically a form of gambling. And I'm not going to encourage that kind of stuff at all. Maybe in the future, I'm going to do a little bit of that, but it's going to be basically with money that I set aside just to play around with. I still don't understand options trading to a level where I'm comfortable recommending it or even implementing it myself. So after reviewing the Robinhood app, I'm going to take a little detour and talk about how I manage my portfolio. I have a spreadsheet where I take all my buys and all my sells and I put them into the spreadsheet, and then it shows me how my portfolio is balanced as far as percentages. And then I have these formulas that tell me this is the amount that you want to invest into this sector or this individual stock in order to balance your portfolio. After I do that, I'm going to review another app which I have not personally tried yet, but I really want to try, and that's M1 Finance. M1 Finance has this feature where you can create your portfolio pie charts with the percentages, and then whenever you deposit money, it will equally distribute all that money across that pie chart. So I think this is a really cool way to design your portfolio and then just feed money into it and it's all automated. I haven't tried it out, so I'm going to try it out and let you know if that's a strategy that I recommend. I'm looking forward to that. And then after that, I'm going to talk about what's next, some more intermediate strategies that you could use. I'm going to talk about crypto, which I think is an emerging asset class of its own that's really interesting. And then maybe in the what's next video, I'll do the Q&A. The Q&A might be a separate video, I'm not sure yet, but we'll see based on what kind of engagement this series gets. And I will do another series like this in the future, maybe a year from now, whenever I have more experience, because I'm going to continue learning more stuff about this. So maybe I can offer a 102 or a 201 series, you know, kind of keeping in line with the university course nomenclature there. And finally, I have a Discord community. This is where I recommend that you interact with me. You can also interact with me on Twitter, which is also in the description. But I'm continuing to grow my Discord community. Right now I have 11 members, so if you join, you're definitely going to be an early bird. And that means you have much more access to shape the community over time and shape the direction of my YouTube channel. So I highly encourage you to join, especially if you already use Discord for, gaming or other YouTubers. But anyway, that's it for this video. Stay tuned for the next video in this series. I'm going to try to release these about once a week. I'm going to sprinkle some other unrelated videos in. In fact, I'm going to record one of those videos right after this. But anyway, that's all I have for today. Stay tuned for the series, and I'll see you next time. I just touched my lens. I probably shouldn't have done that.